So I want to jump on and do a quick stream. Probably won't be up here too long. A lot of fear in the markets, a lot of uncertainty. And all the time I've been in this space, I'll be honest, this is one of the toughest. This is the toughest stretch that I think I've been through over the last 4 to 6 weeks, somewhere in that time frame. So it's tough for even people who are experienced and been in the market a while and know technical analysis and fundamental analysis. You have other people that have been in the space a long time hit me up. They're stressed out. So I'm going to go over here and talk about how I see some things. And this is one thing that got people especially stressed lately. So Dr. Profit, and I like Dr. Profit. He's got like 300 and something thousand followers. He's a known 375,000 followers. He's a known person who's done a pretty good job at calling the market. And he was super bullish. And then yesterday, all of a sudden, he just completely flipped, said he was bearish and selling everything and everything like that. And that's his right and everything like that. And he's not always right. He's got a pretty good track record of, but just because he says it doesn't make it so. I'm not taking anything away from him. I think he's good and everything. But it's a bold move to come out. Like, he's very bold. I couldn't be as bold as him and with as strong of opinions sometimes. That is a bold move to come out and sell everything. To flip bearish is one thing, but then say, I'm selling everything. I advise all my followers to sell everything. So that got some people, at least that I know, even more bearish. So I'm going to look at the chart real quick, how I see it. Looking at the weekly right now, so the weekly hasn't closed. This is how I see the range. Now you can draw this line a little bit different. So I have it like 89.5. Some people say it's 90, 91, 92. It depends on how you draw these things. But you can also, I think the best way is kind of look at the bottom of the range is kind of like a soft zone, kind of like maybe, somewhere from like here to here, generally in like a channel or a range. It's not like a line in the sand. So, just as early as this morning, we were up here. And, it is disappointing with the news that's coming out, and everyone just has this like sell the news kind of mentality right now, which doesn't make sense to me too much, because like when I think of sell the news, I think it's like buy the rumor, sell the news, and you like price pumps into the news and then you sell the news. So like price hasn't been pumping. And Dr. Profit's thing, I think he's kind of saying like, what is there to look forward to now? If Trump would have signed this several months from now, the strategic Bitcoin reserve, then that would have been better and be business as usual, but it wasn't as good as people thought. I don't know what people thought, because to use taxpayer, this was pretty much common knowledge, to use taxpayer funds, you needed Congress, but that's going to take a long time, and then you don't even know if it gets passed. So the executive order, yes, the Bitcoin that it currently has will be, saved. And I talked about this on a Spaces the other day. Now I see other people talking about it. I hadn't seen anybody mention this, that about half that Bitcoin may not belong to them. They may have to give it back to Bitfinex from a hack that happened a long time ago. There's a Netflix documentary about that hack, actually. But that's really the best they could. And then the verbiage in the executive order says that they can potentially buy some, if it doesn't affect taxpayers, whatever, like gold bonds and stuff, which I think is great. However, I think that's tough. I don't know if you want to set that precedent. And maybe they've done it before, an executive orders and done these things and sold gold bonds or whatever the case is. And I just didn't know about it. But if they haven't, then I think it's a tough precedent. If they start selling gold for Bitcoin, obviously I'm for it, but down the road, we may pay for it worse. But anyway, I just, I'm not sure what people are expecting. And maybe Dr. Profit's right. There's nothing else to look forward to. Markets can be generally news driven, but Bitcoin pumps all the time when there's no news. I could go back on this chart, example after example, that there was no news that caused a breakout. And you're like, what does cause the breakout? Well, in my opinion, and I think that you're seeing this a lot right now, is market makers and their manipulation and control over the market. I'm not somebody that cries manipulation every time things don't go my way. I'm not saying that now because something's not going my way, but it's been obvious. A lot of posts about it lately about, hey, Binance sending BTC, ETH, Sol, whatever to Wintermute, which is their market maker, and Wintermute will sell it. Now, and then sometimes they'll sell them USDC, and at bottoms they'll buy some, but predominantly it's been selling assets to suppress price. So, you know, whatever they're looking at, you know, I'm not privy to how they look at the market and how they see things, but you know, maybe they're like, market's not ready to go up, and they allow when the breakout happens, like the Binance market makers. And I think some of these exchanges are even colluding together. It seems like Binance, Bybit, maybe even Coinbase and Kraken to suppress some of the price. So I don't know, but like I've said before, it really doesn't matter because this is the industry we're in. You don't want to worry about this kind of manipulation. Then go trade stocks or invest in stocks and stuff like that. You know, this is the space you've chosen. These are the kind of shenanigans that happen. So maybe it could end up being a good thing with you know, if it is manipulation, maybe they'll manipulate it to the upside. You know, last week, incredible how this candle closed firmly back in the range. I think it could end up being the biggest fake out in Bitcoin's history. And this upcoming week went down early in the week, and I still wasn't too worried because I'm like, we got all week to go back up, and we did go back up. I mean, like I said, as early as this morning, we were up here in the range. So with all that said, you know, what are you going to do or whatever? Well, a few things to point on the chart. So this right here is the breakout point. So this is always a significant place. And it's the same thing here. They're like the same level right there. So that's a level that traders look to when the price comes back down. You know, that's where they'll buy it. It's like a line in the sand point or whatever. So whenever there's a gap there, and I talk about gaps a lot, and price goes up before it gets there, that's good. That's bullish. It means the eager buyers. And we know about the CME gap. You know, I talked about that in previous streams, and that's where the buying started coming in. But regardless, it still left this gap here. So that's good on the pullback that you got last week, that it didn't reach the breakout point and wicked up strong, closing the range. That's great. But then what about this week? All right, well, they weren't able to push price lower, and there was a big attempt earlier in the week, so they couldn't push price lower. But we are below the range. Just as of time of recording, just over the 200-day EMA. That's a pretty important EMA. This yellow one is the 20 period for whatever chart I'm looking at. So in this case, it is the weekly. That's an important one too. Some people consider it like if it's above that, then you're still in bull market. If not, then maybe not so much. But you can see down here, there's plenty of times where it was below, you know, spent significant time below that. And, you know, we didn't really get much of a push down. So we got this trend line here too. You know, talk about some dynamic support and resistance, because this EMA, you know, and I said this before, because if you look back, even on this candle, it wicked off of it. But I didn't think the 200-day was strong enough to stop an aggressive move down. And, you know, it's something, you know, but these EMAs like this, I mean, they can be good, but if you can get continued pressure in that direction, normally, you know, they're not going to hold up but for so long. Now this trend line, this could, and it doesn't have a ton of touches, but it's got enough. I think this trend line, if Bitcoin goes down, it will give it support. It will try to get a bounce off of that. What could happen? Come down here off the trend line, double bottom here, get back up in the range. That could happen. Now, from a technical analysis standpoint, if we are able to close back up here in the range before weekly close Sunday evening, for me, nothing's changed. Business as usual. You know, and we don't like seeing our alts continue to bleed, but that is also the game that you're in. And you know that, you know, Bitcoin sideways down, then alts will probably continue to bleed. But, you know, if you want to sell your alts and with the intention of buying back lower, be careful with that too, if that's your intention, because if it pumps, then that's going to stress you out really bad to try to buy, because then you're going to be like, oh shit, should I buy it back now and lose position? Should I wait for the pullback? You know, people I've seen do that and it didn't work out. They get really, really stressed. So it depends on your goals and what your outlook is. If you're holding, if you're like, okay, I got these bags and I'm holding for the bull market, the mania phase. Well, we never got there yet. So if the mania phase is later this year, was when it's been projected anyway, then in a sense, you know, nothing's changed. You know, you wouldn't have bought or sold anything anyway. But people don't like seeing the unrealized balances go down. And, you know, we're looking at Bitcoin because Bitcoin guides the market. Most people listen to me, they're alt degens and they got lots of alts. But Bitcoin will guide the way, right? So if Bitcoin continues to go down and closes, say like here, especially below the 20-day EMA or 200-day EMA, so let's look at something. So let's see where the midpoint on this candle is. because that's also kind of a line that traders will look at. Okay, I'll just draw this line up here for now. Okay, so this is the midpoint of the candle. And like I said, just early this morning, it was up here. And then with the strategic reserve thing, you would have thought that it would have maybe even flipped green for the day, but it's been down ever since. So this is the midpoint of the candle. So you want to close above that. If we close above that and just below the range, then I think probably that's close enough. That those two things combined, that's close enough that it's in the range. More than half the candle is a wick. Then it's probably kind of good enough to be considered in the range then. Now, if it closes below the midpoint and the further down here, the higher the probability that we go to 74K and test this breakout point, which is nothing crazy. It's nothing unheard of. That happens all the time. You make a new range, it comes down, tests the breakout point. Now, two things when it comes down to test the breakout point. How aggressive is the move down? Dr. Profit, he's calling for 50 to 60K. I think that 70K, that range there, 65 to 74K is an extremely strong level for Bitcoin. It's going to take a lot to break through it. If the move down is extremely aggressive, I'm talking about like big red bar after big red bar, that kind of pressure, and the initial move down here, like taps down into like here and not just touches here and wicks up, and you're getting candle closes on the daily and weekly, in here, then that's the kind of move that could possibly break through this. Now, it would still take some time. It would still take some time to break through this. I don't care how strong. I mean, it would have to be serious black swan type stuff where it just break right through this level. Because it's not just a price history here. It's from the last market cycle, where the all-time highs were. So a lot of price action, a lot of volume is taking place here. It's not that it can't go through it, but it's going to take a lot. If the move down here is just like red candles and like a rangy leg and like little red candles and wicks and overlapping bars, then that's not the kind of move that's initially going to break through it. If that's the case, then it's going to need to spend significant time down here doing something like touching the zone as much as possible and taking out orders, and then try to start making lower lows and lower highs, and maybe that's the kind of thing you would see if it was going to break through the zone. That if it didn't go down on a really aggressive move. If it goes down on a really aggressive move, like say this candle closes here, all right, that's not a good sign. I mean, this trend line, we might can get some support off of, but it's the same concept. If this candle closes above its midpoint, then we could still get more down, maybe come hit this trend line, but it's a decent sign. If it closes towards the low, that's not a good sign, and the probability of it breaking this trend line is higher, and the probability of it coming down to 74K is higher. This is a game of probabilities. Nobody knows for sure. I don't know for sure. Dr. Profit doesn't know for sure. Your other favorite influencers, this is a game of probabilities, and all you can do is make the best decisions you can of what's most probable. In my case, I look at a lot of technical analysis. I'm not just throwing darts at a board. I've taken I've learned from a lot of people, lots of courses, lots of classes, lots of books, lots of smart people. So for me, this is how I assess things. This is the candle's midpoint. We close down here. I'm saying probably a pretty decent chance that we go to 74K. But if maybe we don't close that far down the candle, then maybe we can get some support off this trend line if the move down to touch it isn't so aggressive. Or for weekly close, it could get back up in here. I mean, in a few days over the weekend, it is certainly not out of the question for it to get back in here. This has been one of the toughest times that I've had in a crypto. And this is like, look at this volatility. So this is just since the 25th. All right, look at some of these moves. All right, so from that breakout down, it was 18%. All right, now up from there to that high, 21%. Then the very next day back down, and then over the next 2 days, 14.5%. Then back up, I think it was 14%. Back up 14%. And then in the last 2 days, down 8-9%. Since February 5th, like what day of the week was that? A Monday? So in the last 2 weeks, that is a ton of volatility, flirting down here with the bottom of the range. I said a couple of weeks ago when we started to get these moves down that I'm not buying the dip. I'm not telling other people to buy the dip. I think you should hold if you want to sell, there's no shame in it. This is tough on everybody. If you are, people in different financial situations, if you're like, I'm just seeing too much things, too many bearish things, this is really messing with me, like stress and psychological turmoil, it's just too much, then do what's best for you, and you might, sell. But you also, if you're looking for big gains, you can't win if you don't play. If you don't have bags, you can't get big gains. On the flip side of that, if you don't have bags, you can't get wrecked. So if you've experienced enough pain in the market, there is signs pointing to down. I said last week, if this candle here, weekly candle, would have closed down towards its low, like here, that would have been so bad. Like, is the bull market over? Well, I don't know, but that's the kind of a move that starts a serious downtrend. And it was a miracle on Sunday. We got that, buying up and closing the range, and looked like it'd be a huge fake out. And like I said, even at the beginning of next week, when we had price going down, we still have plenty of time to get up. It's not unusual. Price go down earlier in the week and come up later. And we were up there this morning, so we could still get back up in this range before the end. Now, if it comes down here and closes here, you also don't have to make a decision like, I'm going to sell everything. Maybe if it comes down here, maybe you sell 10% of some of your assets. Hedge your bets a little bit, put some stable coins in your account. If it comes down, you can buy more or something like that, and you still hold most of your bags. So if it does pump, you're also not going to be extremely, extremely stressed out about it pumping and you sold all your bags. It doesn't have to be an all or nothing thing. So you could say it closes here. You could sell 10%. Then say the next week candle is red as well, and you get like a close here. Well, maybe you sell another 10%, or maybe you wait to see how it reacts off this trend line. When you hit a level like this, a trend line, an EMA, a CME gap, you want to go into a smaller time frame. Look at like the hourly. See how aggressive the bounce was. The more aggressive, the better. So that's how you want to do that. If it touches this trend line, this right here, I think that it's reasonable to think that it could touch this trend line and double bottom here. It'd be like, whenever there's confluence, that's always good. But it is definitely in the cards that it can come down to at least come to 74K. And you just have to see how that move down looks and how the candles look to see like, okay, well, was it going to break through 74K, or is that going to probably be the bottom? Or it could form a range and hit there, and then it could start, channeling in here for several months. There's nothing that says that it can't do that in between 74K and like 90K or something like that. I certainly don't want that to happen. It's not that it can't go up, but at the end of the market or the top of the bull market at the end of the year, well, we don't really want to go down and do that. Because then you come down, you got to find support here. Just say it supports good here at 74K or something, and we go up. Well, now we have to break back through the 200-day EMA. We got to break back through the 20-week. We got to break back through the 50-day. We got to break back into the bottom of this range and establish ourselves here. And then we're back to where we were several months ago in the range, and we got to break through the top of the range. And 106 is the resistance. You can look on smaller time frames. We haven't even got to close an hourly close above 106. I know the all-time high is 109, but look at yourself at smaller time frames. We couldn't even get an hourly close above 106. So 106 is the resistance. Sona, what's up? Most people partying the weekends. We're watching analysis to make generational wealth. Yeah, you know me a long time, Sona. I don't really take days off, and I know you're a grinder too, for sure. That you're one of the most active people out there. I know you've come a long way as being a really good trader. Dino, Legendary Leads, what's up, bro? Win no more McDonald's. I don't know. Hopefully that will be the case, and we won't go have to put our McDonald's hats back on. But that's more the bearish case. Like bullish case is we close back up in the range, and to me, nothing's changed. Or as long as we're closing in this range, and people assess things different ways. This is how I've kind of been trained and how I call things. I'm always looking for what structure is the market forming. And that's what I use to go off of. So this is what I determine is the range. If it closes back above here on higher time frames off the weekly is what I use to guide my Bitcoin decisions. Closes back up there, to me, nothing's really changed. I mean, I don't like the fact that alts keep going down, but I also know the game I'm playing. So let's look at some other macro things real quick. So S&P, I think is the best stock market chart to look at. All right, so we got to bounce at the end of the day. That was good. If this would have closed down here, that would have been really bad. You're closing below this, you're closing below this, and below the 200-day EMA. If it would have closed at this bottom, I would have been worried. Now, this wick, if you look to the left, this breakout point here, these things aren't accidents. That's what I say. When it comes down here, that's where traders are looking for this breakout point. You got aggressive buying. Let's go to a smaller time frame. It's pretty aggressive for the stock market. I mean, it was okay. Pretty good bounce, 3 straight bull bars. 2 of them pretty decent. You haven't really you got 4 here, but 2 decent, weren't back to back. I don't know. It was a pretty decent bounce off that, enough that I think that it showed that point mattered. It's also trying to find support at the 200-day EMA. But yeah, it was, bad bars one after the other. But the weekly did get up. We closed above this structure over here, just slightly below right here. Fairly aggressive move down, though. I mean, you do have upper wicks, but I mean, I'd like to see it reverse next week based off of the just, it does have wicks, but it's a fairly aggressive move. So wouldn't surprise me if we see more down in the S&P next week. Unfortunately, the Dow doesn't look as bad as the S&P. It also wicked up today just above the 200-day and didn't even make the bottom here. So the Dow doesn't look that bad. DXY. Now, this is where some of these macro things are conflicting. This looks like shit, the dollar, and that's good. I think that's common knowledge. Most people know that. This is good for risk assets. The dollar going down is good for the stock market. It's good for Bitcoin. But keep this in mind too. When you see these geniuses act like, every so often on Twitter, I say when times are more uncertain, that's when people I think start digging into the macro more. And then you get these geniuses like it's the dollar value needs to go down. That's what it is. Like, it's just this one thing. Like, if it was that easy, people would just look at the dollar chart and trade the rest of the market the opposite of what the dollar was doing. I'm not saying this doesn't matter. Obviously it matters, but here, huge red week, terrible week for the dollar, but yet it was bad for stocks and Bitcoin too. So none of this stuff correlates 100% all the time now, but this is good because this should be more down to go for the dollar. When you get a strong weekly candle like that, I mean, what structure over here to the left of recently is going to stop it from going all the way down to here to at least, a dollar and maybe more, depending on how the leg looks. Interest rates, not really anything to see there. ISM did tick down a little bit. I mean, still strong move up here and still above 50. Not too concerning that it ticked down, but we'd like to see it continue to go up. Now, the thing I've seen people talk about the absolute most, M2 money supply, like that's the magic, whatever. Okay, well, we know M2 money supply is going up. So this is the US M2 money supply, getting close to the all-time high to hopefully break through that. All right, so if M2 money supply is the most important thing, well, it's going up, and there's correlations if you overlay this on top of the Bitcoin chart, somewhere between 40 to 70-day offset. They both kind of line up. 70 days a little more accurate. That would put somewhere between like first and second week of April. If that were to play out and be true, that we could get a move up in the markets. Generally in Bitcoin and most markets, the summer is kind of the lull. So it's where the set, sell in May and go away thing comes. So even if we pump mid-April and it's just till like people are looking to get out in May, that's only 6 weeks. So, keep that in mind too, based off the M2 money supply, that yes, it could go up, but if also you're looking for a sell-off in May, the end of May, then, maybe it's not the worst thing to get out of the market now and try to come back in the fall if that's what you want to do. If it's too much pain, it's too much, it's tough on you psychologically, do what you got to do. Me personally, I'm going to hang in there for now. I didn't come this far to the year post-halving year to dump everything. I may sell small parts of positions of things, like I said, the 10% or something like that, if we get unfavorable closes, like I pointed out. But Chinese money supply, it's always up, it's in a strong up. It's always like that though. And then the Euro M2 money supply, it's close to the US, but it's made an all-time high, or broke that high over there anyway. So M2 money supply is going up. We know that. The dollar looks like trash. It looks terrible. Then the stock market looks bad. So like which macro indicators you want to go off of? I think ISM, it's still above 50. It had been going up just because of tick down. I don't think that's really concerning. M2 money supply, that's favorable. The dollar's favorable. The stock market is not. So the macro things are kind of all over the place. Who knows? But this is some of my thoughts on the current price action and the market. I'm going to hold for now, no panic selling, no buying. And that is what I'm doing as well, Frank. And a lot of people, if you've been in it a while, you got bags, and when you bought these bags, you were like, okay, well, this can 20X, this can 30X, this can 40X, don't feel like you have to buy, continue to DCA down. And if you don't catch the exact bottom, we go up, you still got good price on those things. If you thought it could 20, 30, 40X from those points or whatever. So don't get obsessed with having to catch the bottom. Because what if it does continue to go down? What if this time is different or whatever? Well, you don't want to keep just dumping money in and buy the downtrend. And this is why I tell people, never have a buy the dip mentality. That's how you buy a downtrend into the bear market. Now, we have not, one thing I agree with some of these bears about is we haven't gotten a bull market. We haven't gotten no mania phase. We've gotten none of these things in a bunch of retail and it's all over the news and talking about it at the barbershop. We haven't got that. So if this is over for now, then I think you can make a point at some time this year that the 4-year cycle is invalidated. However, if the 4-year cycle theory is invalidated, it's invalidated on the bear side too. So I'm not going to have the outlook of, oh, we got to wait 4 years. I mean, why? If it didn't work this time, then the 4-year thing is out the window. You got to just get that out of your head. If the 4-year cycle gets invalidated, then it's invalidated. And then Bitcoin will probably be just kind of go with kind of the macro and kind of follow other assets in the NASDAQ and whatever. And altcoins, I don't think they're going to trend and go to zero. They'll have pumps. I mean, during the bear market, it was a pretty serious altcoin pump in 2022. There'll be a pump at some point. I would think. I don't think that altcoins just go straight to zero. So would you suggest next time to buy would be when we have confirmation of a reversal? Yeah, that was probably the smartest thing to do. Don't try to catch the bottom unless you want to put limit orders. If price starts trending down, put limit orders at, for BTC at like 74K. And if you're buying alts, as BTC starts approaching 74K, put limit orders for low levels of alts, like the lowest support you see on the chart or something like that, and maybe it catches the wick down and that works out for you. If not, then yeah, I would wait for a favorable candlestick pattern, green candles on the weekly at least, something to that effect. Perma bears might be right about 70K and they might make good money, but they always lose in the end. They will keep shorting the way move up after 140K. Yeah, and you know how this works, Sona. The more the short, and this can even happen now. The more if short start really piling up, then it can trigger a short squeeze. Market makers can lift the market up. We know they can push the market whichever way. They can come up, grab that liquidity, cause it to spring. That can always happen anytime. And this is how I talk about market structure a lot. Is it a range? Is it a channel? Is it a breakout? Market's only in breakout like 10% of the time. And what happened, and it's like in a range or broad channel, like 80% of the time. And when you're in a broad channel or range, you get big bars both ways, constant switching bars, overlapping bars, wicks, lots of confusion, lots of disappointment. So this is what happens over and over again. is then it ranges and it frustrates people so bad because of all these things I just said. And then they're just like, to hell with this shit. And then as soon as they say to hell with it, that's when the breakout occurs. But they're like, oh, no, this is a fake out. I've seen this, whatever. But it's not how the candles look. And that's how you can tell if it's an actual breakout. Then the breakout happens. It's like kicking a beehive. Once like people see it's breaking out, it's above like the range and out. So then everybody wants to buy, it's that emotion and all that stuff comes in. And then that's the kind of mindset they're in. But the breakout is only 10% of the time. And then so once it settles in the range, they have the breakout mindset and they're wanting to buy. And in the range, you really want to sell green candles and buy red ones. But in a breakout or a tight channel, you want to buy the red candle or buy the green candles or sell the red ones. And people get the opposite because of the way I just explained it. When it's in the range, they settle in, they get frustrated, constant confusion, constant disappointment, constant switching directions, constant changing bars. They say to hell with it, breaks out, they're back in, they're all excited about it. We're going to Valhalla. And this is downside, this word downside too. Same thing, same exact thing. Don't worry if it's up or down. Breaks out to the downside, then they're looking at it the same way. We're going down, it's going to zero, blah, 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 blah. And then settles in a range. They're all used to shorting. Shorts start to pile up on the range, and eventually, the breakout happens in the other direction. And that's what happens in all these markets over and over and over again. Is it possible we have multiple small alt seasons instead of one big one? Well, we'll just have to see. It is, I think all these things that have been cited for not having an altcoin season, like I've talked about them, Danny's talked about them a lot. Token dilution. I don't think token dilution itself is enough to not have an altcoin season. When you're looking at like the top 1,000, 1,500 coins or something like that, and even to the last cycle, I don't think that the token dilution itself, that kind of the Jeet culture that the meme coins created with people selling early and getting so scared of getting burned, I don't think that alone is enough. Then another thing you hear, a lot of people have lost faith in any kind of actual utility in altcoins. They just think they're kind of glorified meme coins and they don't believe in the tech anymore. I don't know that that's enough either. However, if you combine all three of those together, could be, that could be enough to stunt alt season. My friend Eric, I talk about a lot. We're friends in real life. He's a little bit of a whale. He says he thinks his opinion that we'll still have an alt season, but that he doesn't think it'll be like 2021. And that might be what happens. But small altcoins instead of one big one. I would probably err against that a little bit because if we do, when and if we do have the altcoin season, I think it's going to catch people off guard. They're going to be out of the market, and a lot of people are going to be like sell to buy back lower mentality. With the problem with that, lots of times is once they go up and the market makers decide to pull them up, whatever, it prints a big candle, and then it's kind of the thing I was just talking about, where people were like, "Oh well, no, I'm not falling for that," or whatever. Some people will feel stressed out because it was above the price that they bought. Some people will be like, okay, well, I'm going to wait for the pullback. But you got to remember, this is the breakout. Wait for the pullback. You go with the move. So they're waiting for the pullback that's not going to come to those levels. And then they end up buying higher and just get all frustrated and everything like that. Big Alpha Sensei, appreciate that, Sona. Really proud of how you've come along as a trader. You're day trading, you do real good. And you're not as much of an alt degen as the rest of us, so you're probably not as stressed out. You go both ways. You short, you long. You read the market well. So really, really good job over the years, Sona. So I just want to come up here and give my thoughts. I'm not scared at any point to ever say what I think is going on with the market. I don't care what other people say. Dr. Profit, I respect him. I'm not saying he's necessarily wrong. I just think we need to wait for the weekly close and maybe more data and things like that. Sona goes both ways. This week I was stressed out. Yeah. And like I said, this over the last maybe end of January, this has been the most stressful period since I've been in crypto. I honestly believe that. Somebody said this was as stressed out as they've been since the FTX collapse. The FTX collapse, I wasn't stressed out at all. I wasn't stressed out in the least. I was like, this is great. But yeah, I shorted FTX coin at $30, and I was thinking around 15 would probably be a Bitcoin bottom, and then on the FTX crash that night, I jumped into smaller time frames, and that's when I was bagging up at 15. It only went down there one other time, and I was ready with limit orders when it did that. Then, so I wasn't stressed out then at all. I think one reason why it's so stressful now is because this is the post-halving year. This is when the gains have to happen. This is when we become millionaires, or everybody gets these gains or whatever. And the fact that alts are lagging behind so bad, it is a bit concerning. But that was one thing, BTC dominance, that I'll also look at real quick, because I've said that I thought there's a good chance that it's already put in the high. And all right, so long wick, bearish candle last week, long wick. This week you got a little bit of a green candle, but a wick, be good if it got down a little more. I think it's struggling to get past this level here of like 61%. I think this is good, because when you see, this is another thing to see when the mania phase starts. BTC dominance goes down and BTC goes up. So if it's made a high for the cycle, I think that that's good as well. That's a positive point to look at. But anyway, just want to do a quick stream and talk about some of the things I was seeing. I know a lot of people are stressed out, especially since Dr. Profit flipped bearish. And most of the people that I've seen that I respect, that I think are good analysts and can read price action good, they're all still bullish. Jordan Cameron, he's straight bullish. He's not even worried. He seems like he's bullish. Kevin Svensson, Bob Lucas, he hasn't really said definitively either way. He seems kind of maybe in the middle. Maybe he'll put something out later. So there's still plenty of people that are good at this, that are looking towards the upside, and there's always going to be a bull case and a bear case. If it was just obvious which way price was going, then there would be nobody to take the other side of the trade. So hope everyone got something out of that. And if I'm around Sunday evening after weekly close, I will maybe do a stream. I'll definitely at least put something out on Twitter. So thanks for everybody who tuned in, and I will catch you guys later.